recording going. All right. So, hello to everybody and welcome. Training session 4. Hard to believe how fast things go by. We got 2 training sessions this week, one today, obviously, and then one on Thursday. And here's what we're going to talk about today. Kind of a variety of things. First, we're going to spend about an hour in this whole area of profiling, selecting, getting a feel for who you want to work with. So that's profiling the CPA, and then talking about how to get them on board. And then we'll talk for about 30 minutes about a variety of different prospecting methods. So building your target list, building your database of CPAs, and really kind of having a working document, if you will, of potential players to work with. And then lastly, we'll have Scott come up and talk about the email broadcasting system, and from a prospecting standpoint, from a brand name recognition standpoint, dripping on, getting visibility in the community. It's really a wonderful program that a lot of our advisors in the first couple groups are currently executing on, and Scott will be able to talk in greater detail about that. And then I believe that another great prospecting tool or approach is PT marketing. I don't think they're going to be on the call today, Mike. Is that correct? So Bob from PT marketing had a conflict, and we will get him to speak most likely on Thursday's training session. Okay, so that's our agenda today. As usual, let's keep it open, interactive. Ask a lot of questions. Obviously, this isn't for Mike and myself or Scott. It's for you. You got to be clear on things. You got to understand the process, understand the details, et cetera, so that you can obviously implement and execute soon. All right. So in usual fashion, how about just a review and a recap? Maybe open it up to each of you. Based upon the first 3 training sessions, anything on your mind, anything you've come across, anything you need clarification on, anything that you need myself or Mike or Scott to address?
I have something. I feel like a Johnny come lately and catching up with stuff, but I did finally get through reading the Wealth Manager Kit, and on page 26, I have 2 questions. One, it talks about services or products that we would be offering clients. And one thing that is mentioned is setting up a 412E3 plan. And I realize that there may be products out there that I'm unfamiliar with, so I was wondering if you had some suggestions on how I would find training for things like that.
Yeah, good question. The Wealth Manager Kit has kind of gone through a bunch of iterations, a lot of evolution, if you will. And so it's been around for a while. And so it's kind of an all-encompassing document where you can kind of get educated and just get a feel for what's going on in the marketplace. I don't think, like the 412E or this 412I, I don't think a lot of advisors at Invest are going down that path. That's more of an insurance-based program. However, what I found is, backroom technician, Chetley backroom technician. I found a couple other resources, like just going online, if you will, just to get familiar with what these concepts are. But Mike could probably address. He probably does none of that. His primary focus is financial planning and wealth management. So maybe Mike can just kind of touch upon that.
Sure. Just repeat your question for me one time. I'm sorry. You kind of broke up a little bit.
Maybe it's not even something that I need to be concerned with. I'm totally unfamiliar with the 412E plan, and my question is if I'm going to execute properly, obviously I may need to know about products that I'm not currently familiar with, and my question was, how might I become familiar?
Well, okay. What we like to do, generally speaking, is lists a variety of different services that we have access to. We may not be an expert in those particular areas. I'll give you an example. We're getting a lot of play up here on hedging strategies for stock option programs for executives. A lot of play on that. And, you need really to be an expert in that field. So what we're able to do is to use Invest and their various resources and, in essence, leverage the product capabilities and services capabilities of Invest. So I think as long as you have just an overnight, an overview of what exactly is going on out there from a product standpoint, but we want to approach it, Teresa, as just wealth management and planning, and then kind of see where the meetings take you, and then as options open up, then you can kind of look at the various products and then become able to do research, etc. on them. But to have a full knowledge bank of all the programs out there is pretty much impossible.
Okay.
So that's where we kind of fall back on with Invest.
Okay, all right. Then I had one other question. And on that same page of the Wealth Manager Kit, it talks about CPA roundtables, and it mentions that they're held 3 out of 4 quarters of the year. Is this something that I should be aware of? Is it something that would be as likely in my state as somebody else's state?
Yeah, you want to touch on that? Yeah, absolutely. So the roundtables, what you'll want to do is when you start to build your group of strategic alliances, and let's say it's 2 or 3 or 5 or 10, then what you want to do periodically, i.e. on a quarterly basis, you want to get that group together and then you present to them. Maybe it's a half day, maybe it's a full day, maybe there's a golf outing, maybe there's a CE or CPE element to it, but it's just a way on a quarterly basis to gather the troops, get the group together, and then provide some type of information, a topical subject matter, et cetera, et cetera. So you're just looking for ways to stay in front of them on an informal, roundtable basis on a periodic schedule.
The wealth manager who is spearheading that.
That's right, in your demographic area.
Okay.
But that's going to be a little ways away. But once you start to build up a group, that's a great setting and a great way to get the group together.
Okay, thank you.
Yep. Okay, great, good job reading through that stuff. Anybody else have anything on their mind? Jay, you always have something to say. Nothing to say?
I do. I have something to say. It's beginning to make a little bit of sense. This whole thing's starting to kind of, I can kind of see a direction there, and I can start to see stuff. I can see the method to maybe some of the information.
Well, that's encouraging, and that's good to hear. And it's, it's all by design. We've laid it out a certain way. We feel like potentially, I don't feel like it, but some do kind of feel like we're kind of going too slow or we're spending too much time in the overview. But it all matters.
Yeah.
And what I find, and what Mike finds as well, is later on in the game, when you're out there in the trenches, boots on the street, when you're actually doing this stuff, you're going to wish that you got some of this overview, and you're going to wish you got some of this positioning, because that actually will be the difference. All these tools and techniques and strategies are important. You can show them a checklist, you can do a practice profile, and they all matter and they're all important. But again, back to that same theme that we talked about before, the key 3 things is you've got to learn how to talk to the CPA in their language, their terminology, their hot buttons, what they're facing. It doesn't matter if we're great business people on our own and we're type A and we're very successful 20-plus years later. What matters is, can you talk the language? Can you navigate? Can you pivot? Can you talk to CPAs? Secondly, can you articulate the offer? What is CPA squared? How does it work? Why does it work? Why is it the future model? How well are you at articulating that message? Like, for example, and this is not to put anybody on the spot, and please don't look at your agenda, but what does CPA squared stand for? What does the actual initials CPA stand for?
Certified Public Accountant.
Yeah, public accountant.
But is that what CPA squared stands for? The answer is no. Right? Take a look at the logo. So this is just, again, just little stuff that you want to pick up on. Look at the logo. What does CPA squared stand for? Bingo. Right? So maybe Mike can talk a little bit about just, and again, we don't miss anything. There's some meaning behind everything. So what's the meaning behind CPA squared, and what's the squared piece mean? Right? You could actually have not a full meeting, but you could actually have a pretty in-depth conversation with a CPA about just the name and the logo and the square. You're like, really? But it could articulate what it is we're doing in just the name. And it is obviously a play, as you guys mentioned, it's a play off of certified public accountant. But as you guys know, it can work with attorneys, it can work with P&C agents, CPA, certified public accountants is the best bang for your buck, but it can work in a lot of different distribution channels. So Mike, why don't you go ahead and just touch upon the logo and the name and kind of where you came up with it?
Sure. When we were looking to brand this entity, we spent a lot of time trying to configure, a name that would make sense realistically from the offering that we're bringing forward with respect to the CPAs and our strategic alliances. And if you all recall, there were three ways CPAs can essentially refer clients: outsource, in-source, and ultimately co-source, which is our model. So the C in CPA stands for co-source, and then we're looking at other verbiage that we use that CPA squared is proven, practical, and profitable. So the P, we put it as practical, moving forward, when you look at, co-source, practical, and then alliance obviously makes a lot of sense because we're going to strategically align with them. And then the squared denoted that we're going to double their income. That's kind of the subliminal message that we're sending to them. And I literally only had one CPA cause a problem why I'm using CPA squared. Now I trademarked that particular, it's trademarked and it's also, it's done, it's approved. So we've got the look, we've got the feel, we've got the trademark, so we're protected, which I think is pretty important. But that's kind of how, if you're going to build your own brand, you kind of want to think about that. If you're going to use CPA squared, you need to know what, if somebody says, hey, what does this mean? It's co-source, practical, alliance, and squared denotes that we're essentially going to double your income, hopefully, by the strategic alliance. So that's kind of the thought process on where that whole creation came from.
Yeah. I'll tell you guys a funny story. It wasn't so funny at the time that it happened, but something little like that, most likely they're not going to ask you what CPA squared stands for, but if they did and you couldn't answer it, it can be crippling, and it could take a blow to your credibility. So that's why we try to cover a lot of these things. Here's a quick story. I'm with an advisor in Boise, Idaho. And we're presenting to a significant CPA firm, and I mean significant. Multi-partner, lots of gross billings, really a premier firm. Well, we're doing a joint presentation, myself and this advisor. And the advisor has his name up there, followed by his designation, LUTCF. LUTCF. This is his designation. The CPA, one of the CPAs in the room, asks him what LUTCF stood for. and you didn't know. And, I mean, talk about embarrassing. You don't know your own credential, i.e. you don't know what CPA2 stands for. Well, anyway, long story short, they just turned off. They're like, this is the advisor that we're potentially going to work with. He doesn't even know his own designation. And they told me later, after the meeting, that the guy lost all credibility because he couldn't answer his own designation. Anyway, we don't want you to do that. So we're trying to make sure you've got enough pieces to where you don't make that kind of stupid mistake. Okay? But there is some good meaning and there's some good substance and a lot of thought behind the name, which you can talk about. And you think about it, right? So you could look at the name and say co-source. Well, that means I can talk about in-source, co-source, outsource. Practical, I can talk about, going beyond theory, and we have a system that you can practically apply. Because if they can't practically apply it, forget it. If it's too disruptive to their practice, forget it. This stuff is practical. It's user-friendly. We can do this. And as Mike said, from an alliance standpoint, this is not a referral relationship, although we use that from time to time. This is a strategic alliance. This is joining at the hip. This is a business joint venture. So you can see you could actually have a nice conversation by just articulating the name. Okay. Any other comments with anybody? Okay, let's go ahead and plow in then. So if you recall, let's go to the turnkey system here for a second. The member dashboard. Click on the turnkey system. Okay, and then I'm going to go into prospecting and formalizing. Okay, if you recall, Okay, if you recall, look at the step-by-step process, right? We're prospecting, we're developing our list, developing our database, our target. So we're trying to build our working inventory, if you will. And then last week, the next step then is to have an introductory meeting, this exploratory meeting, where we've got the PowerPoint presentation that's all laid out, it's all logical, it's a step-by-step way of moving through that meeting. It's all scripted, it's all compliance approved, so you understand that process. So where we left off then is, okay, let's just say we have a good meeting, this introductory exploratory meeting, it goes well, we're kind of on the same page, and we'd like to move further, see if a working relationship really makes sense. So that's the second meeting, which is what we call the profiling meeting. And let's take a look in great detail what this profiling meeting is going to look like and what the profile looks like. Okay, so I'm going to open that up. Now, the first thing I want to say is I want to talk a little bit of logistics for just a second here. The initial first meeting, exploratory, informational meeting, getting to know each other, typically, where is that meeting held?
CPA's office.
Perfect. At the CPA's office. Now, we don't live in an ideal world. Sometimes that's not a possibility, but to the extent you can, have that first meeting there. You can get a feel for where they're located, their demographics, you get a feel for their office, you get a feel for their staff. It can give you some good general insight about who the CPA is and how they work. So in other words, you go there and they're working in their basement, working in a nice office, working in a nice area. That can give you some input as to who you might be working with and who you might be dealing with. A little bit, not a lot, but it can be helpful. Okay, the second meeting, if you remember, I just threw it out quickly, but maybe you caught it. Where is that second meeting, i.e. the profiling process, where is that meeting held?
Back in your office or there if they have to.
Yes, exactly. So if it's to your advantage, if you could showcase, if it adds to your case, if you will, by all means have it at your office. You can show your team, your staff, your office, your location, same type of scenario. that would be ideal. If you don't feel like it's a showcase and you don't feel like it could benefit you, then either have it at the CPA's office or maybe at some neutral location. Okay? So let's walk through here. The CPA practice profile. This comprehensive profiling system provides an invaluable assessment of your practice. Together we will evaluate your firm in order to gain the insight needed to successfully position it to meet client expectations. In the course of our evaluation, we will recommend actions based upon your specific needs. Okay? One of the things we want to mention is it's always important, whether we're using checklists or marketing plans or practice profiles or introductory meeting or whatever, it's always important to let the CPA know, what we're doing and why we're doing it. It's just not random. There's a very specific track that we're running on, and it's important that they know what you're up to. They love that full disclosure and kind of open discussion kind of format. Okay? CPA practice profile. It's broken into 7 sections. The answers will help tell us if you're offering wealth management services is the right decision for your firm, or if you presently offer wealth management and investment services, how to better realize the full potential. So you should take about 35 to 40 minutes to complete this form. If it goes longer than 35 to 40 minutes, that's usually a good sign because you're diving a little bit deeper, you're having some good open communication, some good dialogue, and that's usually a good sign as to their interest level. But if you come in, boom, 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 answer the questions, check the boxes, not a lot of interaction, then that will give you a good feel. Here's what I also would tell you when you're going through the process, is to try to prod them, try to open them up, try to get them to have some dialogue and some open communication. Now, from an execution standpoint, and you heard that the practice profile is to be done in your office or some location, that means you're going to physically sit in front of the CPA and basically interview them through this profiling process. That's the best case scenario. Because what happens is, if you can engage, have open dialogue, good communication, many times that information that you're going to glean from the conversation could be more important or equally important than actually documenting the answers. So to that point, we don't want you, and again, we don't live in an ideal world. Best case scenario, sit down face-to-face, interview the CPA. If that doesn't work, it's okay to send it to them, have them fill it out, but you want to have some kind of dialogue with them. So what will often happen in that first meeting, you talk about the potential second meeting, you talk about profiling, getting to know their firm a little bit better, and they may say, great, why don't you just send me the profile, I'll fill it out and send it back to you. Now, if that's your only option, take it. But I need you to press for a face-to-face, open dialogue way of getting this information. Okay. The other thing I would tell you is this. The goal here is to get in front of as many CPAs as you can and profile them. It'll be good practice for you. It'll be a good exercise for you. It will really give you this kind of confidence and comfort level of how to move around, how to navigate, how to touch on certain things that will make a difference going forward. Okay, section 1. Now, I'm just curious, of the group here today, have you looked through the practice profile?
Look through, did not read it word for word.
Okay, good. Good. Anybody else?
I don't know.
Okay. You can hear the common theme, and again, you guys know us just because we want you to be successful, is at some point in time, you've got to shift from the cursory look and looking through it to looking at it in great detail. We're going to look at it pretty detailed today because it's such an important piece, but I want you to, in your own time and your own space, to go through it as well. Okay, section 1 is pretty simple. It's just kind of the firm, the contact information, just some good pertinent information for your file. Number 11 will be key, the contact person. In many cases, it's the CPA that you're working with, because you're only going to be working with the solo practitioners, maybe the 2 or 3 partners. But as the firms get a little bit bigger, maybe it's 3 partners, maybe it's 5 partners, whatever, then you really want to know who that point person is, who that contact person is, who will be the internal champion, if you will. And that will be pretty clear to you based upon the first meeting. Okay, second section. Understanding the firm's demographics will help us determine the likelihood of achieving long-term success in the financial planning and investment advisory business. Now, right from the beginning, question 13 were very specific. And I will take you through a little exercise for why growth billings are so important. Now, you might ask yourself, really, guys? CPA is going to divulge this information, especially early in the game? And the answer is absolutely yes. If, and here's the if you've done a good job up front, whether it's emails, phone calls, introductory meeting, what have you, if you've done a good job of posturing, positioning, articulating the offering, then they will actually be really eager to sit down with you, profile their business, and give you some details. There's no confidentiality issues. They're not giving out client names. It's just a feel for what their practice looks like. I have yet to, in my 17 years, Mike can speak to this for as long as he's been doing it, they have no problem. It's a good exercise. They like going through it. They really haven't spent a lot of time looking inside their practice, inside their business, and kind of doing their strategic planning and positioning. They really haven't done a lot of that stuff, if any. And so this exercise is something that's welcomed and they appreciate after the fact. In addition to that, as we talked about before, this is another way you're going to get a check mark next to your name. Very few advisors out there in the marketplace are doing this to this level, right? It's 12 pages long. It's 60-something questions long. Nobody's doing that. So, once again, you have a nice brochure, that's better than most out there. You have a thoughtful name. You have the introductory meeting that you're running through, and it's a track you're running on, and now you're going to profile them. They just are check mark, check mark, check mark. I'm not going to say they're all going to work with you, but if they decide to go down this path, most likely it's going to be you because of all the check marks next to your name. So this whole profiling process, once again, adds to your credibility and helps differentiate and separate you from other players in the marketplace. Okay, gross billings. Let's see if we remember. What's the significance behind asking them what their gross billings are? Is it because we're nosy? Jay? No. Just kidding. Why are we asking them this question?
Size of the firm.
Say again?
The size of the firm?
Yeah, why does that matter?
We should be able to take the gross billings by 10 to 20% as being what income we would generate toward them.
Bingo. Bingo. Right? Now, it's interesting. This exercise is going to look like, and it is, we're profiling them. It's kind of an exercise for them. But deep down inside, who is it really an exercise for? Us. For us. Right? Because you're successful, you're running a thriving practice, you have limited time and resources, you need to carefully pick and choose who you're going to work with, spend your time and resources. And this is a perfect tool for you to do that. And the gross billings, as Teresa said, it's a good measure of what the potential is. So, it's easy. If it's $1 million gross billings, then 10 to 20%, you can at least have some kind of gauge. And now it varies, right? Some are more active than others. Some are very visionary. But in general, we can add something significant based upon their gross billings. So if the CPA asks you, why do you need to know that? Most of them don't. They could care less because you set things up, you teed it up correctly. But if they do ask you, it's like, wow, Teresa, that's pretty early in the game. Why do you need to know that information? Well, because it gives us an indication as to what type of revenue potential, not that it's the most important. Remember, client satisfaction, helping them make decisions, that's most important. But from a bottom line standpoint, because we're all bottom line oriented, especially you as a CPA, it gives you a feel for what the potential is. And then to you, obviously, and I'm not saying you'll walk away from it because there's something to do with every CPA practice, is if they say, oh, I got $150,000 of gross billings, you're like, maybe this isn't quite the firm that I want to work with. I could get some referrals from them, but I may not do the full-blown CPA squared. Now, what was the general rule of gross billings of a CPA firm?
They keep a third of it after all of it.
Okay, yeah, you guys are doing shit. That wasn't quite the answer I was looking for, but we'll eventually get that. So you guys all said some good things. So 1/3, 1/3, 1/3, right? But how many, and the 1,000 multiplier, but we'll go through that exercise in just a second here. But what type of gross billings and how many clients does an average CPA firm have, just in average?
300 to 500.
Perfect. 300 to 500, and there's 1,000 multiple, meaning each client pays $1,000. Now, for all of us who are business owners and do quarterly tax returns and do annual tax returns and payroll reporting, we all know we spend at least $1,000. I'm going to take you through a quick exercise in a second here. But on average, 300 to 500 clients, $1,000 a head. So that means 300 to 500,000. So if you see someone, if you come across a CPA that's got 150, you immediately know, okay, this is a smaller, less than average firm. If you see one with $1 million, you know this is a big hitter and it's better than average, above average. So it just gives you some general kind of benchmarks to quickly assess and profile the CPA. Now, now the next question is, how many clients, right? Now, if you have a firm that has $500,000 of gross billings and of 400 or 500 clients, you say to yourself, this is a pretty average CPA firm. This is a good firm to be working with. If we have firm that has 500 clients and 250 of gross billings, then you say to yourself, okay, probably a little bit below average. Maybe it's a mom and pop. Maybe they're churning out tax returns, and therefore I have to determine, is this a firm that I want to work with? Does that meet your profile? Does that meet your sweet spot? Maybe it does, and maybe it doesn't, but that at least gives you a gauge. If you come across a firm that's got 500 clients and $1 million of gross billings, you can make the assessment that, okay, this is probably a higher-end CPA firm. They're doing more sophisticated stuff, maybe business continuation, maybe planning, exercise, whatever. And so that could be your sweet spot. But you have to determine whether you're Mike Nobile or Teresa Brown or Jay, what is your sweet spot? What is it that you do with clients? And that at least this initial question 13 to 14 can kind of give you a gauge. Okay? And then, of course, you guys remember the 1/3, 1/3, 1/3, how their profitability plays out and how that increased revenue could impact their bottom line. Not on the gross level, but the 1/3 that they bring back. So your ability to kind of again, let me think about it, guys. We only covered just 2 questions, but there's lots of stuff going on in those 2 questions that you can pivot, that you can move around, and that level of detail and that level of conversation can help propel the relationship, and the CPA starts to look at you every time and say, okay, this is unique, they're different, they understand my business, they know the 1/3, 1/3, 1/3, they know what the potential is, that means they've been doing it for a while. There's so many things embedded in the way you speak to them and the way you move around in a meeting that tells them you've done it, you've got credibility, it's proven, it's practical, so much going on here, and that's what we're trying to really embed in you, is that whole concept of how to talk to them, how to articulate the offer, how to learn your lines in the play, because that will be a big difference maker. Okay, and then we go in, again, and then you see question 14 and 15, business and individual. So this will give you an indication, is it a lot of 1040s, is it 1120s, is it business-oriented, is it individual? It just gives you a good gauge up front. Number of support, number of CPAs, number of partners. Now what you're going to notice here, and again, we're going to scan through this. I'm not going to go over every question, but it's important that you understand how it's laid out and how it can help you. If you notice question number 19, it says the number of partners. Okay, well they might say, well I have 2 partners, I have 3 partners, whatever. But there's something to that question, and you see the asterisk there, which means you drop to the note on question 19. Multi-partner firms have the challenge of getting complete buy-in from all their partners. Firms that are on the same page internally have a much better chance of successfully and profitably integrating wealth management services. It's critical that internal marketing is done before external marketing. Now remember, you're not really, in the best case scenario, you're not giving them this profile. And so you can ad-lib, you can add some color to question number 19. And what that does is it opens up the interactivity, opens up the communication, shows them that you're ahead of the curve and you've thought through a bunch of things. That's the difference maker. So rather than, and I like to phrase this because I was an auditor back in the day, and we used to be labeled as box auditors. And that means you just go through the checklist, you go through the boxes, you check here, you fill out the blank here, and you really don't, and you're just kind of mechanical, and you're not really paying attention, and you're just going through the motion. Now, you can find yourself doing that here in the practice profile. But if you can get in the habit of just kind of pausing and kind of opening up and asking some probing questions and getting the dialogue going, it'll be a difference maker. And so you're going to see throughout the practice profile, there might be 4 or 5 questions that have this notation on it. So learn it, take a look at it. It'll be useful for you. Okay. So let's move right along here. You're asking them about their tenure. Mike, you might want to touch upon this a little bit here, but look at question 20, 21, and 22. It has to do with multi-partner firms, how long they've been around, do they have a bunch of young partners, older partners, do they have a defined exit strategy? If so, how will it be funded? Those 3 questions are really relevant, and I think Mike will do a good job of kind of framing that and why that's important here.
Absolutely, Hank. You know, the biggest fear for the matured CPA marketplace today is what's going to happen when they do need to inevitably retire. And they typically do not have a plan, so they don't have a defined exit strategy. They have no idea who or what is going to fund their retirement. And more importantly, the typical CPA firm today, you know, forget about the big 4. The typical firm we're going to be looking at, they really don't have the confidence in the younger CPAs coming into the business, because that whole generation is not looking to sit and do 1040s in an office. they have bigger plans, they have other things in mind. So the CPA, generally speaking, is very concerned about their future. Now, why is that relevant? Because CPA squared will inevitably provide the revenue flow for them to fund the exit strategy. And more importantly, if there are younger partners in the firm, they're going to feel much more confident because the creation of this wealth management division will essentially afford them the ability to fund that ultimate buyout or succession from the senior partners. So I had Steve Weinstein come in and do when I did my CPE event back on June 14th, we kind of partnered. He's the foremost succession planning expert for CPAs in New England. And, you know, we had a lot of people there because they're all worried to death on how they're going to get out, how they're going to fund things. So, you know, those questions are critical. And that's why, as Hank was referencing before, if it's your only shot, they want to do this themselves, then let them do it. But it is critical that you sit with them and go through this practice profile, because you can, in essence, not only confirm the fact that you're an industry expert, but also get a lot of information so you can pinpoint the next phase of the presentation and solidification of the strategic alliance by just pulling little bits and pieces out of them so you know what their hot spots are when you go back to essentially present the marketing plan. So every item here is critical, and you really need to know the dynamic behind each and every one of these questions. So you can essentially smooth the relationship and appear as the industry expert.
Perfect. Okay. Question 23. That's pretty standard, right? You're just trying to get a feel how engaged or how active they are, kind of what they're up to there.
Is there actually an association called CPA2?
Oh, come again?
I said, is there actually an organization called CPA Portal?
No, those are what we're referencing there are CPA portals, meaning online type networks or groups that CPAs become a part of. So it's not a specific name. It's like an online portal.
Oh, thank you.
Yeah. And, you know, most of them will be part of the AICPA, state societies. But you just remember what's happening here is, in the best case scenario, you're looking for a joint venture, a partnership. And so you want to do your homework and do your research and profile who you want to work with. Are they, you know, are they growing? Are they engaged? Are they part of associations? Then if that meets to your qualifications, your profile, it kind of helps you select.
Thank you.
Okay. Looks like we got a little bit of talking and background in a little bit. So if you're going to do some multitasking, you might want to star 6 to mute it. Okay. Section 3. So guys, I think we got a little business going on in the background. So if you could star 6, that'd be great. Okay, certain firms are better positioned and equipped to integrate wealth management services than others. Understanding the firm's core disciplines, expectations, current business practices, and vision will provide us with the necessary information to help position your firm for the future. So here, question 24 and 25, what we're trying to do is get a feel for where they're at, and 25 is going to be where they're headed and what their vision is. So here, we're just getting a feel for what does their practice look like as far as the different types of business that they're doing. What you're primarily going to see is tax and accounting and maybe some payroll. For the firms that we're looking at, the 1 to 3 firms, you're going to see tax, accounting, and payroll as their 3 primary gross billings categories. Now, the attest function. In the wealth manager kit, and again, not intended to insult or intimidate, but can somebody tell me what the attest function is? and if not, no big deal. There was a great discussion
I think it's a combination, isn't it, Hank, of audit work, certification work, and something else, I forget what it's called.
Compilation.
Compilation, okay. So those are the three types of a test, but what does the test mean?
You going to go out and review the work and say that all the numbers are legitimate and real.
Perfect. Who said that? John. Okay, John. So that's right. I want you guys to understand that the origination, the source of a CPA, it's not tax work, it's not accounting work, it's not payroll. It's the attestation function, which means basically this. CPAs, for public companies, they would look at the company's financial statement, the balance sheet, the income statement, the cash flow, the retained earnings, whatever. They would go and look at those statements because they're public companies, and they would do a bunch of work. They would do reviews, audits, compilations, whatever, and they do all kinds of procedures and all types of third-party confirmation, and then they could come back and attest to the fact that their financial statements properly reflect their business. If they said they have $1 billion of assets, they probably do have it. If they say they have $2 billion of revenue, then they probably do have it. And the CPA is the one who's going in and testing and doing a bunch of work so that the public can rely on those statements. That's what a CPA originally did. And that's the attest function. And then inside the attest function, there are three different categories. There's the audit, and this is in a different, should have been in the other review order, but there's audit, review, and compilation. Now, I know this is a little more detailed than you want, but it may come up. It could add to your credibility. It's just some of that surface information that may help you, may land a relationship or build some credibility. So that attest function, it's got three levels. And this is all laid out in the Wealth Manager Kit. The highest level of a test is the audit. And this is where the most amount of work is being done, the most amount of testing. You have all kinds of third-party confirmation. You have all kinds of work. As an example, let's use IBM. It's a great example. IBM is a public company. They have CPAs, and they basically work year-round on their audit. They're testing, they're working, they're asking, they're inquiring, they're doing all kinds of stuff so that everybody can feel comfortable that when they're looking at IBM's statements, it properly reflects who they are. That's the full-blown audit. Most likely, you're going to see none of that in the relationship that you're looking to bridge. One notch down is a review. And it's just relative. They do less work, and they give less assurances. And then the last level is a compilation, which basically is the client walks in with a shoebox and a checkbook and says, here, can you compile and receipts? Can you compile this and create a balance sheet and income statement for me so the bank can rely on it? And the compilation basically says, hey, as a CPA, as I compile this information, as I look through this information, as I gathered it and created these statements, I didn't really see anything weird. And of course, less assurances. Now, why is that important to you? If they're doing a lot of audit work, probably not a good firm for you to work with because there's the conflict of interest. There's a lot of that real high-level attestation that's going on, and it doesn't bode well for you. If they're doing a lot of reviews, a little better, but not great. Compilation's no big deal. But also to our point is, most likely you're going to see very little of this out in the marketplace because the audit function, the attest function, is high liability and low profit. I don't know about you guys, but that doesn't sound like a very good business model. But I just want you to be aware of it. So if you come through and you're working with a firm and 50% of their gross billings is in the audit work, probably not a good candidate. Still something to do with them, and you can always do something with it, but not your ideal CPA to work with. Okay, enough said on that. And 25 basically is what's their ideal target? Where are they headed? And this will give you a little bit of insight as to, well, right now we're doing a lot of test work and a lot of tax work, but we'd like to move to consulting and financial planning. If their mindset is like that, that's good. That's what you want, right? Because you're going to try to help them move into the next phase of the accounting industry, which is financial planning and wealth management, and being that financial quarterback, and you're trying to help them with that. So just asking these mechanical questions could give you some insight. Okay, once again, you see a note on question 24. In the interest of time, we won't go through that, but in your own study, you can go through and see what question 24 is all about. Okay, this is kind of a fun question. So 26, who are your top 3 competitors? Any idea why you'd want to ask this question?
Business rules.
You beat me to the punch, yes. But let's go to the real essence of it. And now what Teresa talked about was a back-end way of getting 3 more names, which is a great observation. But what's potentially the main, and I will tell you most CPAs don't care about this, but it's kind of a cool thing to talk about. Why are we asking for the competitors? We're asking for the competitors.
For how we can improve over their competitors?
Good. But also, we might, and like I said, most CPAs don't take us up on it, but it's kind of a cool little piece. Is you can tell them that identify your 3 competitors in your demographic area, and if all goes well and the activity is robust enough and our relationship is a very productive one, we may want to consider exclusivity. Meaning, you align with us and we'll give you exclusivity and we will help you better compete with your competitors. We'll give you the advantage over other players in the marketplace. It's just something to think about. I would just tell you that most CPAs, and Mike probably can echo this as well, they really don't care. They're like, you know what, I got my book of business, I've had it for a while, I'm not too worried about competitors, I'm not too worried about this, that, and the other thing. But it's just something to talk about that adds to your arsenal, if you will. And then, of course, what Teresa said is they're just giving you 3 names. Okay? All right, let's keep moving along. And I know this is a really detailed discussion, but you can see it'll go beyond the practice profile. It's giving you more ammunition, how to talk to, how to navigate, how to articulate, and how to deliver. So all these things will matter, but it's all compacted in this exercise here. And then you're going to see, if you can remember, if you can throw in some tidbits, some nuggets, what it does is it immediately alerts them that, oh, these guys are not green peas, these guys have experience, they've thought it through, and all these little kind of subliminal messages make a difference. For example, question 27. The percentage of gross billings, what percentage of gross billings does your firm spend on marketing? Right? We're asking the CPA that. What do you think the answer is? Or what do you think most likely the answer is?
Less than 1%.
Bingo. Almost always it's going to be marked less than 1%. They don't market. Right? They're not marketers. But what you can say, so you could choose to mark less than 1% and you can move on. But when we check less than 1%, you could add by saying, pretty much every single time we go through this profiling process, less than 1% is marked. Okay? What does that just tell the CPA?
That we know. what we're doing.
Yes, you know what you're doing. You've got experience, right? You just said, well, pretty much all the CPAs that we come across marks this box. So it just tells them that they're not the first one, that you've been doing this for a while. It's CPA squared, 17 years later, practical, proven, profitable, right? It can have these little messages of significance by just making these little anecdotal comments. We know, I mean, pretty much we know CPAs are not marketers. That's why this relationship might make some sense. We know what you spend and what you don't spend because we've seen it all across the country or all in our area. So it just really it can really benefit you by saying these little things. Okay, what marketing tactics are you using? That's pretty standard. 29, what's the firm's average annual growth? Okay, what do you think you'll typically see here?
$1 to 10%.
Yeah, 1 to 10 or 10 to 25 is pretty much what you're going to see. And so that's pretty common. So if you get that answer, great. If you get less than 1% mark, you got to ask them. That doesn't seem to be the average growth rate out there. What's going on? Where are you? And for you, remember, this is a tool for you. If they're growing less than 1%, you really want to work with them. It should give you some insight as to what they're doing and who they are. And then if they say 25% or plus, you're like, wow, where is that? You know, that's unusual. That's above average. Where's that growth coming from? So rather than just checking the box, have a little dialogue, have a little conversation. Because you want to profile and you want to get some insight. And then where's the growth coming from? Is it expanded services, increased fees, new customers, all of the above? You just want to get some good insight. Okay. We're about halfway through now. Let me keep plugging away here. Okay. How likely is your firm to be would be to add the following products and services? So here it just gives you a good sense of what they have, what they're thinking about, what they want to offer to their clients, what they think you do. This will be an indication as to kind of where they're at. Is it investment management? Is it estate planning? Is it property and casualty? So you just want to get a feel for that.
Do you mean if they were thinking about adding that without co-sourcing?
Either way, you'll see later we're going to ask them which model, but we're basically saying if you're thinking about offering these services, which ones are you thinking about? Forget about how they execute right now. Just conceptually, what are they thinking about? Okay, 32. This will give you a timeline, if you will. Like if they are considering adding these services, is it soon? Is it the next couple months? Is it the next 4 to 6 months? Or is it out in the distance? So it gives you a feel for their urgency, their priority. 33, do you currently refer clients to other financial services professionals? So, again, you either say no or you say yes. If you say no, okay, you're done. Well, you know, why not? You know, and if they say yes, great. Tell me a little bit about that. How's that going? What's that looking like? Because remember, we're trying to steer them to co-sourcing with you, and you want to get a feel for what they're doing. Yeah, we know we currently have a relationship with Edward D. Jones, and this is how our relationship works. The more insight you can get, the better you can customize and pivot and figure out how to create a long-standing relationship. So, like, you know, once again, to Jay's point is there's a lot of meaning to everything here. It's not just a box auditor and just checking boxes and say, okay, got that done, what's next? Okay, why are you considering adding financial services to your wealth management services? Currently losing customers, need to generate revenue, clients have been requesting additional services, interested in expanding firm, get some insight why they're doing it. If one might say, my business just, stinks, and I got to figure out a way to just quickly generate revenue, Yeah, you kind of wonder about a relationship like that. Right? Or, you know what? I'd like to expand and diversify my revenue stream. I'd like to better serve my clients. I'd like to position my firm to thrive in the future. And now we're talking. Right? So you got to be careful on who you're going to work with. Okay, moving along here. Client demographics. So now we're in section 4. Gathering specific information about your firm's client base is essential. Based upon the following criteria, we will be able to help you determine if you have the client base to offer wealth management services. This information will also be used to develop, now we're going to the next step, a marketing plan that's tailored and specific to your unique firm and your clients. Now, again, Mike and I, we're deep thinkers, right? Just that paragraph says something to them. Well, there's going to be a marketing plan, and we want to create something that's unique to your firm. Just that in itself is important because the average advisor out there, or who they've experienced a potential working relationship with, or being prospected to, they're like, you know what, everything's just cookie cutter. And we're now saying we're going to tailor this. We're going to make this unique. We're going to make this targeted and focused to you and your firm. And so this profile that we're going through, and another thing that we'll talk about later is client segmentation. We're doing all this stuff for a reason. I don't know about you, but I'm sitting here listening to that, and you're like, wow, this really is a difference maker. This makes us look so much better out there in the marketplace. Now, eventually you got to deliver, but all the upfront work is a way that you're going to win over, add credibility, and differentiate yourself by just going through this process. Okay, so this is all pretty standard stuff, right? You're going to find out kind of the demographics, how old is their client on a percentage basis, what kind of household income, net worth, client base by occupation, percentage of gross revenue, percentage of client base of gross revenue. You want to get a feel for what their practice looks like because that's who you're trying to partner with.
I don't understand question number 42.
Okay, percentage of client base of gross revenue. So this might be like a business owner, right? So if they have a bunch of potential businesses out there, let's say they have 50 businesses. Okay, of those businesses, what percentage has gross revenue, gross receipts, sales in these different categories?
Okay, I get it.
Right? So that'll tell you, like, if they're just dealing with a lot of small businesses or a lot of big businesses, and that'll help you do that as well. And then percentage of the clients of a test, which we kind of talked about earlier, but this is obviously the business owner that's got the attest function.
Okay, with all of these demographics that we've talked about so far, is there any preferred one way or another? I mean, in a lot of ways, I think to myself, well, the youngest at 20 to 40 might not be as profitable. Of course, they might be professionals, too, who earn a lot, so it's hard to tell.
Yeah, I'll let Mike kind of talk about that for his personal practice. And this is all going to be, right, it's going to be unique to who you are, what your expertise is, and what your offering is to the marketplace. And so Mike can talk about kind of what his profile, what he's looking for in a client base.
Well, I think one of the things that I do is I want to help segment the CPA firm and their clients, whether they're A clients, B clients, or C clients, or business owner or affluent retired clients. So we have various demographics for that. I certainly want a firm that has a higher volume of clients that are 60 and older. Obviously, the household income, I think, 100,000 to 250 or 250 and above. Net worth is somewhat important. I think anybody that has a net worth of $1 million and over is certainly an excellent client, but that doesn't mean that somebody with a net worth of 500 to $1 million couldn't offer a great opportunity to roll over their retirement plan or start managing the other assets. So, I think when you look at identifying your perfect firm in your own mind, you're never going to get it because they don't exist out there. So you kind of have to take the good with the bad. And, ultimately, your goal is to help the CPA, help your clients make more informed decisions. And to do that, you're going to get all different types. But this is a very solid indicator of the prestige of the CPA firm. As an example, I have one firm in a very affluent area in Connecticut here. It's two partners. The daughter is kind of the office manager. You walk in, you kind of look around, and you say, okay, not too bad. But when I went in and did this demographic, they had, I believe, 50% of their clients had $1 million or greater net worth. And so you take a look at their percent of client base on gross revenue, they had a high volume between 1 and 5 million from a percentage standpoint. So I instantaneously knew that this was a sleeper here. And as it turns out, they're one of my best firms. All of their clients literally have $500,000 or more. I don't think I'm sure they have them, but I haven't seen them yet. The smaller client, but so those are very good indicators for looking into the window of the firm. That's the important part of this whole profiling system. Learn this thing, look at it, think it through, kind of use your own imagination in terms of what some of these questions are designed for, and then also build in your own mind what you would like to see as the perfect practice, and see how close you can get. So that's the way I do it.
Thank you.
Okay, keep moving right along here. 43 gives us a little insight as to potentially what their clients are asking for. So we want to ask the CPA, hey, have your clients expressed any interest in the following areas? Right? Risk management, financial planning, investment, just to see if there is some activity, there is some inquiries, if you will, from their client base. And they're like, from time to time, I'm getting more and more people talking to me about retirement planning. My group is, my primary clients are 55 to 65, and they're really starting to ask me a lot of detailed questions about retirement planning. Or I got a lot of business owners, and succession planning is at the top of their list. Right? So this will help you. It will kind of confirm that, hey, there's some activity, your clients do want you involved, and then you can obviously kind of segue into, hey, that's what we're here for. That's what our relationship is. We can help you help your clients based upon the interest level that they've indicated. Okay? Now, this one's a really pretty basic question, but there's more. You can have some discussion. 44 says, describe the quality of advice your clients are receiving from other financial professionals. What do you think most CPAs will answer here?
They have no idea.
That's one way, and you're probably right to a certain extent, which is really a very important part of a very important point, what she just said.
Well, this is Jay. I think they do know because most people run everything through the CPA.
Yes and no. Yes and no, but they'll run it through them, but a lot of times it's like after the fact, right? The implementation is done, okay? And the CPA kind of cursory looks through it, but no, you're right about that as well. So both of you are right. If I had to force you to check a box here, what would you think more often than not, which box would be checked?
Adequate.
Okay? Adequate is usually the box. Why? Because think about this. The CPA is not going to send business to a financial professional if, at least if they can get their arms around it, if they're getting low quality of advice. Hopefully they're sending them to capable advisors. So usually then they'll say adequate, which is a perfect entree for you, because you can say, you know what, most CPAs that we come across answer adequate. So there's that whole thing again of, well, you've been doing this for a while and you've got the track record. So just saying that, most CPAs, they mark adequate. However, also our CPAs that we start to work with, they would really like to move from adequate to high. Right? CPAs would love to have the quality of their advice to their clients be high rather than adequate. And that's what you're offering with CPA Squared, is to take those clients and elevate the quality advice from adequate to high. Meaning, let's work together. Let's not work in silos like most of them do. And you see the information and the recommendations after the fact when they're doing a tax return, and it may be too late. So what you're saying is, you know what? Let's collaborate. Let's lock arms. Let's work together, and then we can move from adequate to high.
Let me ask a question of Mike. I'm curious, if when you sit down and you meet with one of the CPA clients, do you go back and discuss your recommendations with the CPA before presenting to the client, or do you just kind of tell the CPA, this is how I see it and what I would recommend? I'm not sure exactly how that would work.
Well, no, it's a good question. I clearly, moved through my recommendations with the CPA prior to making the presentation to the client for a variety of different reasons. First and foremost, I want to confirm that if there is a tax implication, that everybody knows what the cost and benefit of that particular situation may present itself. Number two, the CPA needs to know before the presentation is made, generically, what are your thoughts, what are your recommendations, and why you're going in this direction. Now, as I mentioned before, when I do a meeting with a client, I have a system in the office called Copy Talk. I don't know if you folks are using that, but it's essentially a debriefing tool where you call a certain phone number and you debrief into the phone to a recorded message, and then an hour or so later it shows up in your email. What I do is I debrief every meeting. I cut that debrief, I paste it into my Redtail client note sections, but more importantly, I send it to a CPA. And I recommend that they set up an icon on their desktop to put all of these debriefs into, so they know if the client calls, they can just hit that one icon, open it up, and see all the notes, etc., as it pertains to their particular client. But then I meet with the CPA either over the phone or in person. I said, this is what I think. Here's where they are. Here's where we're going. I present that to them, our Cheshire Wealth Management report, which, remember, they're quantitative by nature. You need to justify what you're doing. And the more you show them from a capabilities perspective, the more referrals you're going to get from them, because they're going to have a high level of confidence that they're going to place in you after you show them the whole process of the system. So they are very well aware, and they will also help with respect to the recommendations, not from a particular product perspective, but more for a risk tolerance perspective or a tax analysis perspective, that type of input. And you really want to make them feel part of the whole process, so they have some ownership to it. So they know. You can never put them in a position where, I'm doing it this way whether you like it or not. That relationship's going to be very short. Okay?
Yeah.
Okay, very good. Go ahead.
What was that system, that copy, what system?
It's called Copy Talk. And Invest has a relationship with them, so you can buy it through Invest at a discounted rate. And essentially, you pre-program your phone, you get done with a meeting, you call them up, and they'll say, this is Copy Talk. And you then go ahead and tell them the client name, and you do a debrief right into the phone, so you don't have to sit there and type the thing. And then boom, it comes back, you take a look at the email, you go ahead and make adjustments to it, and you're good to go. Thank you. You're welcome.
Okay, section 5. We're moving along, and then I'll just try to get through the practice profile, and then we'll take a break here. We've got a few more sections. It's important to know philosophically where your firm and your partner stand. as it relates to adding wealth management services to your existing practice. Understanding your firm's mindset, expectations, and commitment level will play an important role in how well the wealth management services division performs, or the offering, if you will. Okay? Have you completed the CPA self-assessment form? So that's in the turnkey system. And most likely, they may have some exposure to the self-assessment as part of the AICPA Vision Project. So just as a side note, you may want to Google the Vision Project 2011 and beyond. And that basically, it's this study, it's this project that was done where the CPAs around the country, practitioners, state societies, Board of Accountancy, AICPA, all kind of collaborated to get a feel for where their industry has been, where is it today, and where are we headed. So give some good insights as to the evolution of the CPA. And so you want to know, hey, are they even familiar with it? Are they aware of it? Have they completed the self-assessment, which we have a copy of in the turnkey system? So they might have done it outside of us. If they did, great. If they haven't, you may want to take them through that exercise. So it's similar to the practice profile, except the practice profile is more quantitative, it's more structured. The self-assessment is trying to get inside their head. Kind of what are they thinking? What is their passion? What is their vision? And how do they view the future? So they can kind of be very complementary ways of getting some insight as to your potential partner. Now, if they have read it, if they have gone through it and they've gone through the process and they're familiar with the project and they agree with it, that's really good, obviously. If they don't, that's going to give you an indication that they don't really see the future. They don't see expanded services into wealth planning, financial planning, wealth management. So it gives you some insight. Okay? Are you interested in a strategic alliances that provides the needed expertise, infrastructure, marketing support to offer these services? Hopefully the answer there is yes. Do you want to build a dedicated unit inside your firm? That would be more of an in-source model, and most likely, or hopefully you're saying no, that they just want to strategically align, they want to kind of leverage your expertise, you do the heavy lifting, but if they want to set up their own, which is the in-source, you could talk about that. They say, yeah, we do want to do it in-house, we want to build a dedicated unit. And then you can follow up when you're ready and you say, you know what, basically the dedicated unit, what you're describing is the in-source model. Let me take you through the in-source model, how it works, or why it doesn't work, the fact that most CPAs don't have time, expertise, skill set, and desire. So you can kind of intertwine that in this question. But more often than not, they will say, no, we don't want to set up a dedicated unit. You say, okay, fine, check that off and move on. Okay, is your expectation that both licensed and non-licensed members of the firm share in the revenue? What do you guys think the actual answer should be here?
It should be no.
Correct. Right? If they're going to revenue share, then there's got to be some licensing. And they can't, which is another whole discussion point, what some firms are doing, what some programs are advocating, is you set up this separate entity, maybe it's an LLC, maybe it's an S-Corp, and you have multiple members in there. Just get one of them licensed, and then everybody else can participate. The answer is no. If you're going to touch and feel and participate in the revenue in this side of the business, there needs to be licensing. Period, end of story. And this is where you can move them away from the gray area and make sure, you know what we're all about is doing it the right way. We're all about dotting the I's, crossing the T's, and making sure you never put your CPA firm in the gray area. So you could have a lot of discussion on just this one question. But they may be familiar with it. Yeah, we get it. We know if everyone's going to participate, they got to be licensed. Great. So if they understand that, you move on. Okay? If you implement wealth management services how much revenue do you expect to produce in the first 12 months? I'll kind of categorize these a little bit together. 50% of gross billings, what are your expectations for the cost?
We want to interrupt for a minute.
Yeah, go ahead.
Now in a couple questions about 48.
Okay,
Now, if you have 2 or 3 CPAs in a firm, if they got to share in the commissions, they must all be licensed. If we go in and we have one fellow that says, hey, I'll learn, I'm earning 50,000, that's fun. He can't build out in the general pot of the CPA's earnings. In other words, the commissions from the investments, and he put that into the general income of the CPA firm and spread it around, or does everybody be licensed?
Yeah, that's a good question. And the answer is no, they can't do that. Do they do that? Yeah, absolutely they do it. Right? But you're not supposed to. Think about it. If you're going to participate in the revenue, then you need to be licensed. And they're going to participate in a roundabout way, and they're going to get paid for commissions, they're going to get paid for insurance, you're going to get paid for financial planning, and they're not licensed to do so. And so just putting it in a pot is frowned upon. Now, that's where you come in, which is beautiful. There's a lot of that going on, and that is being abused, and this strategy is being recommended. Now, there is some, and it's much deeper than today's conversation. There is ways to kind of offset and move around and kind of adjust the partnership revenue sharing arrangements. If one person is kind of in charge of the financial services, then you can make adjustments at the P&L of the CPA fund. That's totally appropriate and legal. But you just want to kind of stay away from that, and you want to say, look, the general rule of thumb is if you're going to be in our business and you're going to participate in the revenue and share in the revenue, you need to be licensed.
Hank, let me just add something. I just want to make this crystal clear to everybody. From an Invest financial perspective and a CPA Squared's perspective, you need to tell the CPA right up front that they cannot take a fee. Because remember, CPA Invest will not pay a CPA entity. You register the advisor on an individual basis. So if John Smith is the partner with the licenses, then John Smith gets paid by Invest. John Smith cannot take that money legally and move it into the entity that the CPA firm is formed under and then share that revenue with the partners. It's totally illegal. You can't do it. Okay? Under no circumstances. So what you want to do is advise them that all the partners need to get licensed and registered. That's the correct way to do this. So I just want to make sure that that's clear. This is not a gray area. This is exactly how it has to happen. And I, Gabe Aiello and the rest of the compliance team at Invest, we've talked about this in the past, and I just want to continually stress and make sure that you understand that everybody needs to be licensed and properly registered with Invest before they can share in any kind of revenue.
Well said. And guys, that will be an advantage to you when you're out there talking to CPAs, because there's so much misuse, so much abuse, so much of this stuff going on, and you're like, you know what? We don't mess around. We don't ever put your CPA practice in the gray area. This is the way it's got to be done. This is the way of the future, and they appreciate that.
What kind of licensure do they need? A Series 6, a Series 7, what?
Mike?
Oh, sure, they need the Series 65. Okay, 65, all right. Who asked that question? John, where are you located? What state? Pennsylvania. Okay. I'm sitting in with Mel. Oh, okay. Pennsylvania, unfortunately, like Connecticut, is not one of the exempt states, so they need to take the Series 65 exam from the commissioning, so they can share in the revenue from AUM business only. If you happen to do a transaction, then you can't pay them. So it's only 65 AUM activity. That's the model you want to approach and go into these firms with, because you don't want to be viewed as a product peddler or a transaction-based planner. You want to be viewed as a fee-based planner, because they're much more open to that from a cultural standpoint than if you come in, wheeling and dealing and want to sell product. We'll get into that later on.
Okay, let me move on. And again, our hope is that you go back into re-listen, but more importantly, pull out the CPA practice profile, and as Mike said, kind of get in there, look at the questions, understand what we're trying to get across here. If you can, again, the introductory meeting, the brochure, the practice profile, the marketing plan, there's some key pieces here that just is a wealth of information, and it will pretty much set you up long term if you know these pieces, how to implement, how to execute, how to pivot. This will help you long term create the significant results. Okay, so you don't want to just mechanically go through these questions. You want to have this dialogue. Now look, and we're spending a good hour and a half or so on this, right? And that just shows you the importance of being able to navigate, pivot, and have an appropriate second meeting. Because you take them through this process, you're going to know if you want to work with them. But also, they are going to know, hey, do these guys have it together? Do they know what they're talking about? Do they have the experience? Do they have the track record? This is your opportunity to take them over the edge and push them forward. And that's why it's so critical not to just send it to them, have them fill it out, so you can see all this dialogue really will be a difference maker. Okay. Section 6. Got 2 more sections, and then we'll take a break. Information gathered in this section will help us determine what type of program best fits your organization. The questions are designed to address practical application issues rather than theory. These questions are extremely relevant and of utmost importance. So this is where you can kind of get a feel for practical application, implementation, execution. What is this relationship going to look like? Is it going to be a loosely managed referral relationship? Is it going to be a full-blown co-source revenue sharing licensing relationship? Or is it somewhere in between the hybrid of a proactive referral relationship? This will kind of give you a little more insight as to that as well. Okay, how many people in your firm will be dedicated? Get a feel for how serious they are about it. Is being independent and objective advisor important to you? Now that one, there's that asterisk. Of course it is. Right? They're all about independence and objectivity. But go to the footnote and you're going to see why we're asking this question, because it may be that they are doing business with somebody else. They may have a strategic alliance in place, or they may be considering working with somebody else. And I like to use Ameriprise as an example. Not so much anymore, but back in the day, Ameriprise was very proprietary. You had to do their stuff. And CPAs hate that. And so if you come across in this conversation, they say, remember one of the previous questions, are you working with another financial professional? Are you thinking about a strategic alliance? They say, yeah, we're entertaining an alliance with Ameriprise. So you can shed some light on that. Typically Ameriprise, this is how they operate, and they're very proprietary, and you got to use their funds, which our experience has been that CPAs want to be independent and objective, and they don't want to find themselves in a proprietary situation. So either who they're doing business with now, or who they're thinking about doing business with, or you being totally independent and objective with Invest platform, you can have a whole discussion on question 53. Although it seems pretty simple, you can have a discussion on it. There's a footnote that helps you. Okay, 54, how involved do you want to be in your, do you and your firm want to be in the following aspects? So here's a idea of how active, how involved, how much do they want to be part of this process. Okay? So the very involved, not involved at all. Now, obviously, when you get into the recommendations and the presentation, you got to be mindful of what licenses they have, whether it's a full-blown license like you, or is it a referral rep, or is it a solicitor's agreement. There are certain things that they can and can't do that Invest and Mike certainly can shed a lot of light on. So you just got to be careful as to what they have and what they can and can't do. But here, all you're trying to really get at is, do they want to be involved, not involved at all, or somewhat involved? Okay, 55, how important is it for you to have the following support? What would you guess the answers would be on these, local, regional, and national? Which one? All of them?
Very important. Regional and national.
Yep, pretty much, yep. So very important to have local support, a little less important regionally, and then probably in the same category, or maybe not that important at all on national, but it's usually, hey, we need you here, holding our hand, helping with implementation and execution, and then it's somewhat important to have regional and national support. So, kind of the way you could look at it is the local support is you guys, the regional support is more of us, or / national, and then Invest is a support mechanism as well. So those are kind of the three levels of support. You, your advisory group, us, CPA2, and Invest Financial. And so that gives them the comfort that this is more than a yellow pad partnership, that first and foremost it's us at the local level, but we have some resources to draw upon as needed. Okay, are you interested in obtaining additional financial services certificates, registrations, and licenses? So we want to get a feel, are they, do they want to do it right? Do they want to get their Series 65? Maybe they want to get their CFP, whatever. It depends on what level that they're working with. You just want to get some insight as to what they're thinking. Okay, quickly, how much time per month would you dedicate to professional education? Right? Again, it's just understand that these questions were, were created many, many years ago, where CPAs were getting fully licensed, i.e., Series 6 or 7, 65, life and health, and so we want to get an indication if they do go down that path. Are they willing to personally commit to personal education? Right? And then as a preference, do they prefer to work online or personal seminars? You're just trying to figure out how you can help them. Okay? How comfortable are you in being able to handle compliance management aspects of the wealth management services? What do you think more often than not, which box is going to be checked?
I would need help.
You got it. You got it. Are you considering a relationship with other wealth management services providers? No, you're done. Yes, tell me about it. And maybe you could be an educator, a consultant, and provide them with some insight. Whether they do business with you or not, okay, that's fine. But I love to be in a position where we just want to be a resource. We want to give you some insight, give you some industry intellectual capital. And that can help you. That can help you if you can just give them some good insight, some good guidance. What type of relationship are you interested in? A lot of times you've kind of moved them in the right direction, so they say co-sourcing because you've done a good job of laying it out. A lot of them will just say, I'm not sure. Well, if you haven't had a good chance to do it in the first meeting, this is now your chance to talk about the different models. The in-source model, the in the order, outsource model, in-source model, co-source model, and this is your opportunity to articulate that, if you haven't done that already. And most likely, you've done it in the first meeting. And most likely, you've gotten to a point where they say, co-source makes the most sense to me. Okay, how would you rank the importance of the following attributes in your decision making? Right, convenience, service, professionalism, ability to generate profit, revenue, trust, other. Okay, last section, and then we'll take a break. Firm technology capabilities. In order to effectively introduce and market wealth management services to your existing clients, you must have the technology capabilities that are able to extract pertinent information about your clients. If your firm is lacking in this area, we could provide some general guidance or assistance. That line really doesn't even matter anymore because the software today versus 10, 15 years ago is so much more user-friendly, so much more advanced, can do so many more things that they have this area dialed in. So they're using these questions here, they're using client database management, tax software, and you're just trying to go through this process, not in great detail, but what do you got going on, what software, what are you using, and can it do what we need it to do, meaning can it query your database, can we segment your clients based upon income or net worth or occupation. We're just seeing if they have the capabilities because eventually we'll want to use that when we do some marketing, when we do some client events, when we try to move the needle in this relationship. So it's kind of just an exercise to go through. These guys have good software, good technology that can pretty much do anything. Now, if they don't have that, then obviously you don't walk away, but you just say, okay, well, based upon what you have, here's how we're going to segment your clients, here's how we're going to identify opportunities, here's how we're going to kind of go through this process since you're a little bit technology challenged. But trust me, nobody at this point is technology challenged. Okay. So with that, I know it was a long process, a very detailed process, but there's so much to this questionnaire, to profiling, to sizing them up, and then a lot of terminology, a lot of positioning. It's a necessary process for us to go through. Okay, why don't we go ahead and take, I'm sure I'm wearing you guys out, why don't we take a 5 to 7 minute break, and then we'll move on to the next section of the agenda. Everyone's kind of coming back.
Is this Hank?
Mm-hmm.
Yeah, Hank, I've got a couple questions about what we just covered.
Yes.
I think it was, I'd like to say something that maybe I just missed it. On Section 5, questions 49, 15, 51. I'm not really quite sure what the point was on these.
Let's go back to that. Which questions again?
The last three. 49, 15, 51. 49, 15, 51.
Yeah, sorry. I'm a little slow. What can I say?
That's all right. I'm trying to enjoy some ice cream here.
Okay, yeah. Here, so 49, if you implement wealth management, how much revenue do you expect to produce in the first 12 months?
Okay, I get that one.
You get that one, right? We want to be able to establish expectations here. Mm-hmm. If they're like, 25% plus, I'm like, whoa. Or less than 5%. Typically, remember we talked about the 10 to 20%. So you have that discussion and you want to be able to curtail and manage expectations.
Right.
And they may say, well, I expect 25%. And then you would say something like, well, the average CPA firm, is typically in that 10 to 20%. If you want to achieve 25%, then we got to step it up and we got to do these types of things and we got to create this type of activity.
Okay.
Okay, 50.
Put it back on them a little bit.
Yeah, exactly. Which is good because accountability is if they are willing to do certain things, then we will have some success. But if they're not going to do anything, we won't have success. But if they want to do something really grand, well, we got to put on workshops and seminars and lunch and learns. We got to get in front of 5 clients a week. I mean, you got to really create some activity, and they may do that.
Okay.
Okay, 50 then, as a percentage of gross billings, what are your expectations of the cost of entering into the wealth management business? So obviously this is a business. There's some licensing. There's maybe some marketing. So we want to get a feel for them. Are they willing to spend some money?
Okay.
Right, in branding, in creating activity, and doing some marketing and client events, et cetera, et cetera. Right.
Okay.
So if if they say less than 1%, you got a typical CPA on their hand, a miser about money. It just gives you a good indication.
Okay.
And then remember, 49 was in the first 12 months. And then 51 is basically what are their expectations kind of more on a long-term basis.
Okay. All right, thank you.
Okay. Anybody else have a question on the practice profile?
Yeah, this is John. I just had a quick question related to, and it's just a simple question. When we ask about what type of accounting software they use and stuff like that, what's a good response if they ask, why do you want to know that?
Yeah, well, a good response is right in the opening sentence. Right there.
Okay.
Got it?
Yep, thank you.
You bet.
A couple of years ago, when I was discussing a referral relationship with a PNC office down in Salem, and we ended up establishing that relationship, but I was amazed when one of my very first questions was, how can we profile your client? And they keep nothing of that nature. They said we can tell you who our business clients are, we can tell you, the age of clients, we can tell you where they live, but that was about it. I was really amazed.
It is pretty amazing, but I will tell you, I don't know how long you did that, but things have evolved pretty significantly in the last 5 to 10 years, and technology capabilities has really changed.
Well, I can imagine that CPAs would have a much better handle on it.
Yeah, we're just anal, detailed people. So they got it. Oh, and by the way, nobody really asked the question, but on the profile, a lot of times the advisor will say, well, do they really have this information, like percentage of revenue, where their business is coming from, how many clients they have? The answer is absolutely yes. Not to the T and not 100% accurate, but they know this stuff right off the top of their head, and that's good enough for what you're trying to do here. They really have a good feel for their business. Okay. Now here's the goal, is we'd really love to see, because it's good practice, it's going to help you in the long run. Here's the visual. We hope that you've been out there having these introductory meetings, exploratory meetings, and profiling pretty much every CPA that you come across. And the idea here is that you have 10 CPA practice profiles, and you fan them out over your conference table. And then you can pick and choose which ones make sense to do full-blown CPA squared, which ones make sense to do a proactive referral relationship, and which ones make sense to just do a loosely managed referral relationship. But you can't do that analysis if you only have one or two. So our point is, get out there, create the activity soon, and get going on profiling CPA firms.
Now? Are you saying now instead of waiting until the 8th?
No, I'm not saying, well, it's soon, like meaning this is where it's going to start to cross over. Training 4 and 5, we're going to give you some very specific action items. We're going to get you to customize some of these materials to your disclosures. It's going to start happening soon. Now, you can wait as long as you want, and you can wait for 8, and then you'll probably be more prepared, but you can start taking some baby steps here now. So, and we're going to, next session, we'll give you a sheet a document of action items of things you really should be doing right now.
Okay.
Among just studying and looking through it, and no more cursory looks at stuff. You got to look detailed. And if you got questions, fire them away either in the training or in an email or whatever. Okay, maybe.
You know, on the thing that you show us at the very, very beginning before we start our meetings, where you have your email there, it's underlined, and I can't tell if that one thing is a G or Q.
It's QFP.
QFP. Thank you.
You bet. Okay, as usual, you have so much to cover. I'm wondering, Scott, I'll let you make the call here. Scott, do you want to do your session next session, meaning Thursday, or would you like to do it here?
Yeah, finally the Thursday, so you can stick with the agenda.
Okay. Okay, and guys, we're going to get to everything, just agendas don't quite play out sometimes, but Scott, if you're okay, I'll defer you to next Thursday, and probably we'll have PT marketing there as well.
Yeah, I think that makes sense, so we kind of go over the prospecting methods first.
Okay, perfect. Mike, maybe I could have you close agenda item 1, which is the third meeting, formalizing the relationship. Can you maybe just give the group a feel for just the licensing process, the timing, how you work with them, the paperwork, how you kind of get them on board?
Sure. Hey, can we have that process timeline available?
On the CPA intro, the initial?
Yeah, that would be helpful if I could kind of show them that.
Yep. Hang on here, John.
It's called the CPA process, and essentially the first month, you do the initial presentation, you profile the practice. We have a letter of intent that we like you to send. And then at that point, we deliver the licensing and registration kit. Months 2 and 3 essentially consists of scheduling the Series 65 exam for the CPA. But before you can do that, they have to go through the OBA and background check with Invest. And then ultimately, once that's cleared, then they begin the registration process. And there is paperwork in order for them to essentially get that completed. But I initially, once they agree to come on board, I instantaneously have the staff reach out to, I don't recall the name of the company we buy our books from, but I just automatically pay it with a credit card and have the books delivered right to the CPA's office. Is the Kaplan? Is it Kaplan? Yeah. Okay. Once that's done, then, we look at if we're going to set up an LLC for this entity, or are we going to go with, just no formal entity. And then we'll present a marketing plan, which is pretty big, and that's important. And then we'll start helping them profile clients, and we'll get their office set up and start doing training sessions with the staff, because we want everybody to know what we're doing, why we're doing it, and then for them to learn their lines in the play, so the delivery of the message is consistent across the board. In other words, the front desk staff person, if they're questioned by a client, boy, why is he going into wealth management? They have to know what to say. So month 4 comes, that usually takes 2 or 3 months to get all that done. Month 4 comes, and we start with our financial planning days, all the marketing activities, the client appointments, and the implementation of the financial services and wealth management component. So they commit. It usually is a 4-month process, really, from A to Z, but that doesn't mean that you can't start getting referrals right out of the box, because I had a lot of referrals in month 1 when the CPA has really just agreed to come on board, and then all of a sudden the client comes in, and then they start thinking about the integration process, they start thinking about all the opportunities, and actually we're seeing clients, so you don't really have to wait until everything is finalized before you can begin your business. Now when that happens, and as a client comes on board, think about the way fees are paid. They're either paid monthly in arrears, or they're paying quarterly. It depends on what particular institutional partner you strategically align with. So the CPA is only missing 1 or 2 months if it takes them that long to get licensed. And then once they get licensed, you go ahead and change the rep code on the piece of business, and you're solid and you're good to go. So that's pretty much my approach and how we do it. And they're very comfortable. Most CPAs, they don't want to be rushed. They have a process. Like I have 2 women that I met through my June 14th webinar. They're hot to go. They want it now. They want to do everything right away. It's October 1st, and they're just in the process of taking their test now. So you can see how things come when they're highly, highly motivated.
Hey, Mike?
Yeah.
This is Charlie talking. Do you present yourself as part of the LLC or as Matt Global from Noble?
No. What happens is they create a division, and they'll name it whatever they want to name it. Let's just say it's XYZ Wealth Management Division. And what I do is I let them know that I'm the advisor who runs the Wealth Management Division for the CPA firm, but I'm not a member, and I don't, indicate that I'm, anyway formally connected to the LLC. So it's just their LLC. Most CPA firms won't even do that because it's a lot of work. But it does make sense when you want to separate the two and want a clear distinction between the CPA practice and the Wealth Management Division. So there are advantages to doing it, but most of them don't. It's just one more step that they have to get involved with, and they don't, they try to avoid that. But I simply tell the client that I run the Wealth Management Division for the CPA firm.
And if he asks you, are you part of his company or your own company?
Yes, I am not part of the company. They brought me in. We have co-sourced, meaning we're strategically aligning our firms so that I can offer wealth management services to their clients, but they do participate, and they are compensated, and that all is disclosed in the solicitor's agreement that's signed literally before you do anything with the client.
But so you tell them it's an alliance.
It's an alliance, right?
Yes. Okay, thanks.
Yep.
Yes. How realistic is it to anticipate these referrals and financial planning days, et cetera, happening at the CPA firm during tax season?
It happens all the time. Quite frankly, that's one of the best times to do financial planning, guys.
Okay, I didn't know if they were just so swamped that it's like, sorry, we'll talk to you in 4 or 5 months.
Well, some of them are and some of them aren't. It depends on the culture and how they run their operation. But, if it's a one sole proprietor firm with one staff person on a part-time basis, you're probably not going to be doing, financial planning days. But if they're a full-blown firm with staff and they have space, and, it happens. It happens quite a bit, frankly.
Okay, thank you.
You're welcome.
Okay. Let's jump into CPA prospecting, building your database of CPAs. First thing I wanted to show you is the resources that you have available. Tab. You come in here to CPA prospecting and formalizing the relationship. You click on CPA prospecting, and then there you see 16 different documents, tools, things to consider as you're working to prospect to build your list. So obviously you need to get in there, look around. It's not rocket science. It's pretty self-explanatory, but you jump in there and see what you can, and what tools you have available to you when you're in that prospecting, building the list mode. What we'll do today for the next, about 25 minutes or so, is we'll just talk about the different types of ways to get in front of and build your list. And then you can go into these tools for implementation and execution. Okay, so let's just have a discussion of this whole prospecting process. So you see there we've got 8 different ways, and there's probably more out there. These are kind of some of the key ones of ways to build your list. And the first one is approach existing relationships. So these are CPA firms, P&C firms, law firms, whatever, primarily CPA firms, that you have some type of connection with. You have potentially a mutual client. You are part of a club, a network, the Rotary, whatever. And you've done some business with them, or maybe it's a golf relationship, or some type of organization. So you want to sit down, and you'd be surprised. You initially think, I really don't have those connections. If you just sit down in your own space, quietly, with a pen and paper, and you think about CPAs that you've come across, that you've got some type of relationship, some type of connection, and start jotting those down. Don't know how many of those are going to be. Usually, it should be, especially if you've been in the business for a while, and you've done networking, and you're part of groups, and you've got mutual clients, usually you should be able to come up with at least 3 to 5. Should be more than that, but if you get 3 to 5, that's a start. And then, of course, you jot them down, and then those are the ones you want to reach out to, whether it's phone call, email, letter, whatever, and talk to them, expose them to CPA Squared, and get them to do one thing, to agree to the introductory exploratory meeting. So each of you now should have, or soon, you should have some type of Excel spreadsheet, and you should start to build your database. Starts with 3 or 5 or 10, and you're going to see all these other ways that you can start to really build your database, your working inventory, if you will. So your wheels should be turning about some type of connection. Okay? A very effective way is to ask your clients for names and numbers and contacts. Now, in the turnkey system, which you will discover, there are a couple of different client referral letters. How to position it, how to posture it, how to help that process along. So ask your clients, because the benefit is to them. It's all about professional collaboration. You'd like to work with their CPA so you could jointly work together to help them. So many clients will be eager and open to coming up with names and numbers potentially for you to talk to. Now think about that. Now some of them may have the same CPA, but if you have hundreds of clients, you could build a list pretty quickly that's kind of blessed and endorsed by your client because of the whole benefit of professional collaboration. Okay? 3 is tap your network. And I'm not talking about your COI network. I'm just talking about your personal network, your professional network of inside your network that could lead you to CPAs, attorneys, and P&C agents. Now, you guys remember that we looked at this one piece. I'm going to show you that just to kind of put a connection here. Remember this piece of partnering with CPAs. Okay, now I want to just give you a quick sample of what you could do. As you guys know, I'm trying to, I've been doing consulting for 17 plus years, looking to build my own financial planning, wealth management piece of the business, and so looking to partner with CPAs for obvious reasons. It's such a natural for me, right? I sent this piece as an attachment to some of my professional network. A business owner, someone who works for Bank of America, whatever, not CPAs. And this is what I said. Can you help, very simple in the email, can you help connect me to your CPAs in your network? That's all I asked them to do. And this is what I'm looking for. So I sent them the attachment. I'm looking to build meaningful business relationships, strategic alliances with a select group of CPAs, successful CPAs. The ultimate goal is to professionally collaborate the right way to protect your client, to protect your practice, and strengthen your client relationships. So as we already went through this document, I'm saying this is who I'm looking for, and this is what I can help with CPAs. Can you just, based upon this, can you send me some names and numbers? Well, one of my network relationships was very connected and ended up giving me about 80 names. Because he was in the consulting business, he was trying to work with CPAs, and so he had a database of CPAs that he had some kind of connection with. Now, all of them didn't meet my profile. Some of them were the bigger firms, the multinational firms, which, wasn't my fit, but there was probably 30 to 40 of them that were a good fit. Just like that, another 30 to 40 names. So think through people that you're connected with in your professional network that could maybe turn you on and put you in front of. Now, I ended up taking it one step further and having this particular person in my network actually reach out to the CPAs, kind of bless and endorse me and make the introduction for me. So even better. But I want you to, as Mike was saying, think out of the box, think creatively of what's in the toolbox, what's in the CPA Squared turnkey system, and how can I use it? How can I position it? How can I leverage it to get to help you try to get where you're going? And in this case, this particular letter or this email with attachment is a great way for you to get in front of potentially more CPAs. Okay? Number 4 then, let me back out of this one for a second here. Number 4, knock on doors. It's not the most glamorous. It's not probably your preferred way, but it is a way. And I'll tell you a quick story. This is a real story in North Carolina. I had a individual advisor who moved to North Carolina and knew nobody. Had no network in place, and he basically went around, and he had a little team. There was 3 advisors, so just to put it in perspective, and they basically drew a 2-hour circle around their office and drove around and knocked on doors. And they handed out the brochure with the introductory letter, which is what we talked about a little bit before, and just started knocking on doors. And it's not cold calling, but it's just kind of walking in. 3 years later, went from 0 to $1 million of GDC. All 3 of them, though, not just one. By just knocking on doors and getting the word out and talking about the program and just pounding the pavement. I'm not saying it's what everybody wants to do, but if you're strapped and if you're limited on how you can build your list, it's an option. The phone book is an option. I know it doesn't sound very glamorous, but it could be very effective. Okay. Cold calling. Tough go. But you could get a relationship or 2 out of it. We have cold calling script in the turnkey system, which you'll discover when you look through there. How to bridge the conversation, how to address what questions that they might have, and it's all in there. As a reference point, you see there, Info USA. You could actually go to them, tell them that you're looking to build a list of CPAs in your local area. Very inexpensive to buy their list, but they actually will give you a free sample, usually on it with an Excel spreadsheet. They'll have it to you in minutes. You could get 40, I don't know, I think last I looked, they gave you like 40 names sometimes. You could get 40 names of CPAs in your local area for free on an Excel spreadsheet. Not ideal, but it's just yet another. I mean, think about that. You approach your existing relationships, maybe you get 5 or 10 of those. You use your clients, maybe you get 10, 20, 30, 40 of those. You tap your network, you may get 50 or so. You knock on doors, you get a handful. Do some cold calling, you get a handful. And it's not going to take much, right? I mean, if you're depending on what you're trying to do. Are you trying to get 20 relationships? Are you trying to get 100 relationships? Trying to get 5 relationships? It won't take much. But I want you to just be thinking about all the different ways to build your target list, to build your database, your inventory. Okay? One that could be very effective, and I'll let Mike talk about this, but coordinate a CPA, CPE seminar event. It can be really, really powerful. Mike, why don't you just touch upon what you have done the first 2 and just kind of the results at this point?
Sure. I essentially did every form of prospecting. You know, the letter to the clients, asking for who their CPA was, the professional relationships I had. I hired an independent third-party marketing firm who specializes in getting appointments with CPAs. And then I did my own CPE event this year. And by far, the most effective method is the CPE event. The problem is there's really a sweet spot for when you can do these to be effective that you'll get great attendance. And that's typically in June of, every year. So for those, obviously, who can't wait until June for somebody to talk to, you're kind of forced to start building up your database, start finding and identifying firms that meet a specific profile, and then depending upon, what type of investment you're willing to make into this, whether you're going to hire an outside third-party firm or whether you're going to hire somebody to do it and essentially cold canvas CPA firms, or whether you're going to do it yourself or a combination of all 3. But the bottom line is, you have relationships with CPAs that you're probably not even aware that you have, because each and every one of your clients, I would suspect, has a relationship. So that would be the first place I would start. And then Scott's going to talk to you next week about an email blast campaign that we do. Every week I email various topics to roughly 1,200 CPAs that I have put in a spreadsheet over the last year and a half that constantly get these little dripped email blast type programs that are just amazing. It works out extremely well. PT Marketing is an independent third-party firm. Mixed reviews. They've done a really good job. They got me started, so I really can't complain too much. I'm pretty excited about that, but, it's tough. It's a tough marketplace out there. And then more importantly, you getting on the phone and contacting CPAs that you know. But the bottom line, the CPE event is by far the most effective, the most organized, the most direct way for you to get an audience of, 40, 50, 60 CPAs in a room, where when you're doing the presentation, providing you do your homework, and you come off like an industry expert, that's where you build your credibility with these firms. So they call you, they know who you are. It's really a great concept. So I would strongly recommend the CPE event. By the way, we have done everything. We have postcards, we have, email blasts, we have invitations, we have ideas on speakers, we have the PowerPoint presentation with all the talking points, everything you need to do this. You just have to essentially decide you're going to want to do it and then set up your own timeline and structure and get it done. But it's by far the most credible, effective way of getting yourself in front of CPAs.
Mike, this is Jay Leonard speaking. I just wanted to ask a quick question. When I was going through that information about a month or so ago, there are requirements, I guess, to, you're enrolled in something to qualify the CPA to get CPE credit. And I wanted to ask, I finally came up with it, and the guy asked it, Is it your firm got qualified, or is it the material that got qualified?
No, you're talking about NASBA.
Yeah.
Yeah, NASBA is an organization that essentially you apply to, and Hank, please step in and correct me if I'm wrong, because I'm not sure I'm using the right terminology, but you essentially get appointed as with NASBA after you submit your presentation, and you get recommended to offer CPE credits. Most CPAs will not go to an event that doesn't have a NASBA logo on it. Okay. So it's No Deal Wealth Management that is essentially the sponsor for NASBA. It'll be thousands of dollars, to be honest with you, to get that. And Hank and I were talking last week. We're going to call, or maybe the call's already been made. We're waiting for a response from NASBA to see if you guys can kind of present underneath the No Deal Wealth Management credential. So we're looking into that right now. If they say no, then you're going to have to go and get your own sponsorship through NASBA. And again, we've done it, so we know what the application looks like. It's really straightforward. It just costs money.
Right.
And that's the problem.
Is it, okay, I hear what you're saying. Let me know when you find out that they say, and I guess my question going further with that would be, well, would they let us use your stuff and just report, some of the name? I don't know how that would all work out.
Yeah, we're inquiring because that did come up. I think I probably spent close to $2,000 initially getting the endorsement by them, and then roughly $800 a year to, continue my relationship as a sponsorship relationship. But you know what? It's pretty impressive when you're a NASBA sponsored provider with CPE credits. That's a minimum with these guys. They want that. So, again, it all depends, Jay, on how far you want to push it.
Well, I'm thinking to myself, how would I be able to leverage that all that information or all that material you have on that? You know what I mean?
Yeah, I get it. And I had to do it, and I didn't mind doing it because I want to be the guy who was doing the presentations up here.
Well, can I use your stuff?
Well, that's what we're going to find out. You can use
but use your stuff. Okay.
Yeah, you can use the PowerPoint presentation. We know that because that's been approved. You have to submit it to get it approved, but it's pretty much just a rubber stamp. But it's whether or not you're credentialed under No Deal Wealth Management to actually be the credentialed speaker that would be providing the CPE credits. That's where we have to be very careful.
Yeah, of course.
And we'll check that. We're checking on it, so I don't know what the status is, but the minute we find out, we'll let you know.
All right, thanks. I appreciate that.
My name is Hi. Could we show the speaker for example, and then we go to your travel and about you, and then you come into the presentation. Do that count? Yeah, you can do that. And in fact, I would recommend you use Hank as the speaker. I'm really good at it, but I have to bow to the original architect. He is amazing. Absolutely amazing in his presentation, and quite frankly, I brought Hank in to do my first CPE event just to see how it's done, and then I went ahead because again, it's at some point you got to be recognized as kind of the prominent, foremost expert or industry expert, so you're going to ultimately want to do your own. But initially, I would clearly hire Hank because I did it myself. And if, for one reason or another, his schedule doesn't work out, then I could come in and do it for you. But he's the guy. He's definitely the go-to guy. He's absolutely amazing. And, I hit it off with my CPA, so I did a nice job. But I'll be honest with you, I probably spent 80 hours preparing for this thing. It was intense. It was like I was learning my lines. It was like, I was going to be in the movies for crying out loud. I had to memorize everything. And, Hank and I spent hours on the phone, doing webinars to hone the presentation. But it went off perfectly. It was literally went off without a glitch. And, there were 80 plus people at mine, and 30 of them checked off that they wanted to hear more about, integrating, and I'm talking to those folks right now to get them all set up before tax season starts. So,
the national presentation of CPA squared is without CPA squared.
Yes.
oh, it's about integrating wealth management services into your practice. That's the title.
Okay. Yeah. All right.
I'm not hiding it. I'm coming right out in front. I'm saying, here's why I'm here. You're going to be lucky, and I come off with the attitude you're going to be lucky if you're from qualified to work with us. Versus just the kiss in the ring,
Yeah, when I saw the stuff, I was like, oh my God. I expected something different, like this gentleman is saying in Chicago, and it's all about integrating. It was great.
Absolutely. Isn't that what we're here for?
Yeah.
It's transparency in this world, guys. They want to know what they're doing there. They're very interested, by the way. This isn't 10 years ago. This is now. They want to do it. They just don't know how to do it. And that's what this whole presentation shows them. But from my perspective, if I were you, I'd go with Hank first, I'd go with me second, and then I'd go yourself third, in terms of using us to do this. But you want to start planning literally now for next June.
And just as a homework assignment, if you haven't done it already, is you could really benefit, even though you're not putting on the CPE seminar in the near future, you could benefit immensely if you went through the PowerPoint slides. There's like 80 to 85, 90. Go through that because you want to talk about positioning, what are you going to cover, how to educate to the CPA. It is a wonderful piece to elevate your knowledge as to what you're doing, what the offer is, what competitors are doing. It's a really key piece that you could really benefit from if you went through it slide by slide. And again, it's all laid out, it's compliance approved, and it's all scripted. So it could, once again, there's some key pieces here that could really elevate your knowledge level and give you that confidence and comfort level when you finally do get released and start meeting with CPAs face to face, because you can interject stuff from that presentation.
Anybody have any thoughts on doing something before the holidays? Would that be crazy, or?
It would be pretty close. It would be pretty tight.
Okay.
It would be pretty tight.
Well, it's late on February. Everyone's getting their, the W-2s and stuff out. And everyone's getting, so it's either, right away or June.
Yeah, I think you got plenty. You got plenty of work to do, and there's ways to get in front of your 3 to 5 CPA relationships, and maybe joining the state society, which we're going to talk about. I think there's plenty for you to do, and then you're really going to be at a level where that CPE is going to make a lot of sense. So I think you probably, my opinion, Mike, I don't know about you, but I think you should probably hold off for now.
Thank you.
Yeah, I agree, Hank, because most of the CPAs already have all their credits for this year.
Oh, right.
Right. So you'd be just inviting them in. I mean, they don't have a lot of time right now to wait because they're getting geared up for February.
Okay.
So I don't think you'd get the success you would want to get, and then you're going to get discouraged, and, it's not a good thing. So,
Thank you.
Yep.
Okay, the last item then, Scott, are you still around?
Yes.
Why don't you just briefly touch upon the impact or the effectiveness of joining the state society and how that kind of intertwines with what you potentially are going to talk about next week or next Thursday.
Yep. Thanks. Another really effective method is to research your individual state's society of CPAs. You can just do a Google search. It's usually the first thing that comes up if you put your state and then society next to it. And there are a couple things that you're looking for on there. One, you could join as a member, or really determine if you're eligible to join as a non-CPA. And that gives you insight and access to events that are going on in your state, and really keeps you knowledgeable. As basically what's going on in the marketplace out there. But more importantly, it gives you access to basically lists of CPAs that are out there. Each website has a nice basically database that you get access to build up your list of CPAs, and you can do it in various methods, depending on how big your state is, but there's ways to approach them, whether it's through email blasts or through letters or whatever way you decide to do it on. But when you're doing that, a couple things to keep in mind. One, you could see if you could access the database without having to join. Each website's different. I know in Connecticut, we were not able, we had to join in order to access the database that's available, but we have found that in some other states you could look on the website, go to the database and basically search for CPAs throughout the state and comes up with hundreds that are their members, and kind of either export that into a spreadsheet or there may be some manual work that needs to be done. But this is a really effective way. It's not overly expensive if you do have to join. Each state's different, maybe $200 to $300 depending on your state. And we actually have we've done some research on every state out there as well. For the various websites that you could look at and the fees associated with that. But it's not hard to kind of do a search and take a look at that. So
perfect.
Well, and I'll correlate that to the email blast program next time, Nick.
Okay, perfect. Now, guys,
can you also go on to like the individual states business licensing? I'm pretty sure, like in Oregon, that CPAs have to be licensed, and I would think that there would be a way to access that information there.
Yeah, absolutely. Absolutely. It's not one of them.
You can do that. You can do that. The problem is that you can't filter, which is something that you're going to want to do. In other words, once you determine your profile of the firm you want to work with, like we like sole proprietors or 2 to 3 partner firms. We have a certain county or certain cities that we want to essentially market to. So we'll filter with that search criteria. So we cut out all the big 4 and all the senior partners and all this stuff, so we can really identify people that are legitimate prospects that we want to start building our brand to. And another thing that I'm launching very soon is a LinkedIn version of CPA Squared, where I'll download those same 1,200 names and I'll offer them an invite to come join my LinkedIn network and start building CPA Squared through those 1,200 CPA firms via social media, which I think is something that you guys are going to want to start thinking about as well. Down the road, it's one of the methods of prospecting.
Very clearly, on a relative basis, it's not going to be hard to build a database of CPAs. You might have thought so before, but when you look at all these different techniques and strategies, and some of them are more robust than others, but when you start to, tap your network, your existing relationships, ask your clients, knock on doors, coordinate a CPE seminar, state society joining, you will have no problem building a pretty robust list of CPAs. Hundreds, if not more. It will be this is going to be one of the easier things. You got to spend the time and a little bit of resources and really do the work, but building your list in an Excel spreadsheet to where you can drip on them, you can build your brand name recognition, you can create visibility so that eventually they will come around. You will not have an issue building your database of CPAs. That should be pretty easy. Pretty easy. Okay. Hard to believe, but 2.5 hours just went by. Next training session number 5 is scheduled for Thursday, the 4th. And let me just take a breather here, let us take a breather and see if there's any other questions or comments before I go through the final quotes. But anybody have anything on their mind?
Yeah, Hank, this is Jay. I just want to, do you have any, what do we look at for Thursday's meeting? Please.
Say again?
what will we be covering on Thursday? So we just go ahead and put the stuff off and get a head start.
Yeah, well, we will be, for about an hour, we're going to pick up here CPA prospecting. Scott's going to talk about the email broadcasting system. And then we're going to bring in PT marketing, so there's an hour of it. Okay? And then most likely we're going to talk about the marketing plan and some recommended action items. So Thursday we're going to give you a list of things that you really need to be doing. So we're going to have a detailed list, the one-page action item list of, okay, now you need to do this, and this. We're going to lay out what you need to be doing.
Okay. Very good.
Yep. So it'll be we'll be able to cover the 2.5 hours pretty easily again.
Thanks.
Surprise. Okay. Let me just finish up with the quotes, and then I'll release everybody, and then we'll get reconnected on Thursday. So if done right, CPA squared will be a game changer. Vision is good, but action is great. Practical application. And then today's quote is, be willing to do what others are not willing to do. The work. And with that, Mike and I and Scott will release you to a wonderful week, and we'll see everybody on Thursday.
Thank you.
Thank you. Bye. Take care.